Hello everyone, and welcome back. In this video, we are going to take a deep and professional look at gold versus the US dollar. On the 30-minute time frame, please take a moment and focus on the overall structure of the market. At this moment, gold is trading in a clearly bullish environment. We can see strong bullish momentum. We can see higher highs. And most importantly, we can see higher lows. Multiple bullish breaks of structure confirm one important fact. Buyers are in control of this market. Because of this, our primary trading bias should remain bullish, not bearish. Now, let's talk about market strength. Price is currently trading above the previous day high. This is a very important detail. Trading above the previous day high tells us that the market has accepted higher prices. It also tells us that sellers are weak at the moment. As long as price stays above the main demand zone, we should focus on buying opportunities only. Now, let's carefully mark the key levels on this chart. The first and most important resistance is the previous day high, located around 4,523 to 4,526. Above this level, we can clearly identify a weak high, around 4,533 to 4,535. This area is very important because liquidity is resting above those highs. On the downside, the most important support is the demand zone between 4,460 and 4,470. This is where strong buyers previously entered the market. Below that, we have the previous day low, around 4,450. And even deeper, there is another strong support zone between 4,430 and 4,440. Now, let's move step by step into the trading scenarios. The first scenario, and the safest one, is a buy on pullback. If price retraces slowly into the demand zone between 4,460 and 4,470, we do not buy immediately. We wait. We wait for confirmation. This confirmation can be a strong bullish candle or a clear change of character. On a lower time frame, once confirmation appears, the ideal buy entry is around 4,465. The stop loss is placed safely below the demand zone, around 4,448. Now, let's talk about targets. The first take profit is around 4,505. The second take profit is the previous day high, around 4,525. And the final take profit is the week high, near 4,535. This setup offers a very strong and healthy risk to reward ratio. Now, let's discuss the second scenario, the breakout buy. If we see a strong 30-minute candle closing clearly above 4,526, with acceptance above the previous day high, this indicates continuation. In this case, the buy entry would be around 4,528. The stop loss should be placed below 4,510. The first target is 4,540. The second target is 4,555. This scenario has higher risk, so position size must be reduced. Finally, let's talk about selling. Selling in this market is counter trend. It is not recommended for beginners. A sell is only valid if price takes liquidity above 4,535 and then shows a clear bearish change of character on a lower time frame. In that case, the sell entry would be between 4,530 and 4,535. The stop loss goes above 4,545. The first take profit is 4,500. The second target is 4,470. And the final target is 4,455. Now, let's summarize this analysis. As long as gold remains above the 4,460 demand zone, the bullish bias remains valid. The highest probability trades are buys on pullbacks with proper confirmation. Sells should only be taken after liquidity is grabbed and structure clearly shifts. Always wait for confirmation. Always manage your risk. And never trade without a plan. This analysis is for educational purposes only. And it is not financial advice. Thank you for watching.